Accounts Committee in the exercise of its constitutional mandate to ensure accountability, transparency, and value for money in the management of public accounts of the Federation, pursuant to Section 85, 88, and 89 of the 1999 Constitution of the Federal Republic of Nigeria as amended, and other 95 sub 5 of the Senate Standing Orders 2023 as amended, embarked on a status inquiry into the income and expenditure of the Nigerian National Petroleum Company Limited. The status inquiry, which commenced in May 2025, has lingered due to the failure of the NNPC management to provide comprehensive and satisfactory answers to the questions raised by the committee. The legislative inquiry exercise originated from the committee's observed financial management lapses during the consideration of the Auditor General for the Federation's annual reports for the years ended 2019 and 2020. Auditors. The review also covered the NNPC, now known as NN. The observation and findings by this committee seeking clarification on inconsistencies observed in the audited financial statements for the period under review. Although the responses provided were not satisfactory, a critical examination based on question 1 alone revealed the following. Accrued expenses. You recall, by the literature contained in the audited financial statement of NNPC, the accrued expenses figure is 103 trillion. NNPCL reported in its 2022 audited financial statements that the sum of 103 trillion represented accrued expenses. These accrued expenses, according to the books, consisting of retention fees, legal fees, and audit fees accruals, whereas no figure was allotted to these items in the audited financial statement. I repeat this. The retention fee, legal fee, and audit fee that have accrued to make up 103 trillion, none of these items was allotted a figure. Subsequently, NNPCL, as a result of the questions that we asked, NNPCL responded that the 103 trillion represented cumulative amounts expended by joint venture partners from JV cash calls. This position contradicts the disclosures in the audited financial accounts. It is worthy, that is very ridiculous, and it is worthy of note that cash call regime was abolished in 2016, which took effect from January 2017. To that and for that, this response is unacceptable, and the figure of 103 trillion is still lingering and hanging on NNPC, which it claims part of it was owed by some defunct banks and other entities. However, the company, NNPCL, was unable to provide a clear breakdown identifying the banks, whether defunct or not, or other entities responsible for the amounts comprising this sum, which were never mentioned in the audited financial statement. This is also unacceptable. So the figure 107 still lingers on NNPC. Yeah. Alleged duplication of subsidy costs. Subsidy costs were deducted from crude oil proceeds in the books of NAPIMS, and also from the petroleum product proceeds in the books of NNPC, amounting to 3.8 trillion. Again, It is worthy of note that NAPIMS, as a subsidiary of NNPC, cannot have its own separate accounts from NNPC. Item 4, direct production cost. NNPCL/NAPIMS admitted charging 5 trillion naira as direct production cost between 2017 and 2021. Whereas NNPC and NAPIMS do not produce crude, thus diverting funds through over-bloated illegal cost charge against crude oil revenue. This is also unacceptable. So the figure also stands lingering on NNPC. NNPC paid 2.9 billion for incorporation expenses from petroleum product proceeds, while NAPIMS charged 2.9 billion as well against crude oil revenue for the same purpose. This resulted in a combined total amount of 5.9 billion being expended for incorporation by NNPCL just to change the name from NNPC to NNPCL, which is unacceptable and rejected. So that means 5 billion naira is also lingering on NNPC in this day and age. Who will comprehend such a figure to be expended just to change name of NNPC incorporation from NNPC to NNPCL? 5 billion naira. In view of the aforementioned, in view of the inability of the current management of NNPC to provide satisfactory explanations regarding the identified infractions in the audited financial statements from 2017 to 2023, the committee resolves as follows: that NNPC should refund the sum of 210 trillion, being the combined sum of 103 trillion and 107 trillion, which were not properly explained to the committee, as the aggregate sum cannot be netted off in tandem with accounting principles. That, because under ideal accounting principle, it would have been liability subtracted from asset. But in this case, the liability figure is unacceptable to the committee because of the contradictions in the explanations, and also the asset figure, which is the accrued receivables, 107 trillion, is also not acceptable as well to the committee. So NNPC should and must account for the two figures. Then the two figures put together make up 210 trillion. The second resolution of the committee, that the NNPCL should refund to Treasury all production costs charged against crude oil revenue for the period under review, since the NNPC and its subsidiaries, NAPIMS and Co., do not directly produce crude oil. 3. To invite the immediate past management of NNPC and NAPIMS and their auditors to be led by the present NNPCL management to provide clearer explanations regarding how these infractions happened, which will further enable the committee to take measures that will forestall future occurrences in the management of public funds. Immediate management of NNPC and NAPIMS, here what we're saying, immediate past management is, of course, Mele Kari, as the Group Managing Director, Umar Ajia as the Chief Financial Officer, and Bala Wunti as the then GGM NAPIs, should and must appear before the committee and to be led by the present management with the entire body of the external auditors that served within the period under review that put together this. 4, that the Auditor General for the Federation should carry out forensic audit review of the audited financial statements of the NNPC for the period under review in line with Section 85 of the Constitution of the Federal Republic of Nigeria, 1999, as amended. Conclusion. The committee will, in furtherance to the exercise of its constitutional and legislative mandate, continue to engage with relevant bodies, both public and corporate, including the media, to enhance improved public fund generation and utilization for the attainment of good governance and infrastructural growth of the nation. The committee, finally, the committee and the Senate reaffirms its legislative support to Mr. President and Commander-in-Chief of the Federal Republic of Nigeria, His Excellency Senator Bola Ahmed Tinubu, GCFR, in his quest for a financially robust economy through the renewed Hope Governance agenda. Thank you.
Chairman, any question? Obi.
We have known you to be, such a question shouldn't even come from you. Because you know that obviously if they don't come, there are procedures. And then we will comply to the procedures. But we will invoke our rules, but before then, we leave it until we get there. At a point, if you remember, when this thing started, the present management of NNPC did not appear about twice. At the end of the day, when we went on to the table with the provisions of the law, they had to comply, and they appeared. So whoever this committee or any committee of the Parliament of the National Assembly invites and the person refuses to come without satisfactory reason or reasons for not appearing at the date scheduled, of course the needful will be done. We are empowered by the Constitution and our rules of engagement here in the Senate. If what the executive order says today had been done in the past, maybe we wouldn't have found ourselves in the situation that we are. But having found ourselves in the situation that we are, before the executive order, the needful must be done to take care of what transpired before the executive order, and then from the commencement of the implementation of the executive order, the system flows.